Today, we have two speakers as part of a series of webinars. We'll be looking to conduct information sessions targeted at law firms and conveyancers. From a PEXA point of view, we think it's very important that we're bringing you our insights and also helping you run your business as effectively as you can. And to some extent, that's going to depend on insights and information from other parties, including ourselves. So we have today with us Julie Toth, who's PEXA's Chief Economist, who'll provide you with a view on what we're seeing at the macro level and how that might play into the considerations for your business. The second element, we're delighted to have today Bill Lang from Small Business Australia, who is one of PEXA's partners, and we're, again, as part of this, delighted to make available, and this is effectively a relaunch of PEXA's partnership with Business Australia. From our point of view, we recognise that a number of you are, as small business owners, there's a challenge in working out where you can go to for independent and reliable information on the variety of aspects that hit your business. We think it's important that that sort of information is available to you in a convenient location that you can readily find and access. To that end, we've partnered with Business Advantage to bring its service to you. We've taken feedback from our initial offerings of this last year, and between Bill's team and ours at PEXA, we've revisited the approach. We did hear from you that you're not sort of particularly keen on subscriptions, upfront subscriptions, particularly where you don't know how much value you're going to get from a service like Business Advantage. And so between Bill and ourselves, we've re-engineered the offering to make Business Advantage for conveyancers freely available to all of you. It's there anytime you might need to find out information about different areas of your business. There is, in addition to Business Advantage's broad commercial offerings, it also has very specific information about the conveyancing industry and topics that are going to be relevant to you. Increasingly, PEXA will make sure that all of our information and research, such as Julie's presentation, will be available through Business Advantage so that you can find it conveniently and easily as well. So Bill will give you a bit better flavour of the breadth of offerings that Business Advantage has and how that might be relevant for you, not specifically narrowly today, but in terms of those future things that you need to come across on topics as broad as, growing your business, coaching, developments, CLE, cybersecurity, but also these important topics around how are things moving in the broader market. So we're delighted with our partnership with Business Advantage and bringing that to you.
Now, the population growth numbers, I'm picking those out for you because they're particularly significant when we look at state differences in property markets, and it helps explain, for example, why we're seeing such strong demand in Queensland. Now, during COVID, we did see Queensland get quite a strong boost, mainly due to interstate migration, that is people moving mainly from New South Wales and Victoria, but also from other states moving north. Now, if you have a look at that first graph there, the spotty line indicates where we're up to right now, and beyond that are the forecasts. And Queensland still has stronger population growth than Victoria, New South Wales or South Australia in percentage terms, and certainly in raw number terms, it is adding more households and more demand to that area than we're seeing in the southern states. And that's quite a significant driver of those differences that we're seeing, and the stronger demand, the higher turnover and pricing profile that we're seeing in Queensland. Victoria, in contrast, had the biggest population fall during COVID, and it is recovering relatively slowly. The red line there at the top indicates that government is expecting Victorian population growth to pick back up to where it was pre-COVID, but actually that hasn't happened yet. It's still on the forecast horizon. Victoria's population growth is more dependent than other states on temporary migration flows, and particularly international students and skilled visa workers. So those groups are yet to return in really, really solid numbers. What I wanted to do, just to illustrate the fundamental drivers of property markets and why we do see such strong demand, in and around what the interest rate cycle is doing, it really does come down to demography and population growth. And the old line that demography is destiny certainly plays out in Australia. It's a key reason why our property markets tend to be stronger than those in comparable countries internationally. So we do have high population growth by international standards. And most recently, even though we saw a pause during COVID with those borders closed, our population growth rates have bounced back remarkably quickly. Rather wonderfully, we didn't suffer the losses that other countries saw during COVID for all the wrong reasons. We saw a pause, but it has bounced back. Now, migration is, of course, the major contributor to population growth in Australia, which is another key difference for us compared to many other countries. But what that means is that the population growth that we see is largely adults arriving, and that means they feed quite directly into demand for housing, rental housing, and of course for purchases. It has a more immediate effect and a direct effect on property markets than it would, for example, if we had the same numbers being added through natural growth. Okay, what I'm going to do for you this morning, we've got sort of about 10 to 15 minutes just to chat through what we're seeing in Australia's property markets. But there are quite an unusually large range of factors pulling the property sector in different directions at the moment. And they're coming from local sources and also, of course, from the global environment. Now, I won't run through all of these in detail, but of particular note in the short-term outlook and certainly local is the interest rate track that we're seeing, and those very, very steep rate rises from the RBA, which are flowing through almost immediately to variable home rate loans, and certainly will be hitting a greater number of people rolling off fixed loans very shortly. So I'll talk through that in a little bit. The second big one, which is actually a big positive for Australia and the fundamental underpinning for residential property markets in particular, is the demographic and migration trends in Australia. Now, they're a really important driver at a local level, so I'm going to pick through some detail for you so you can see what the underpinnings are as we move forward from here. Inflation and cost of living, big news on the pricing and cost side, and of course the major reason why we are seeing those rises in interest rates. Jobs and incomes are another positive. We've now got record low rates of unemployment, but also underemployment. So even though inflation is eroding cost of living, household incomes are actually holding up reasonably well, and that's because more people are in work, and many households have increased their work hours in response to those cost of living pressures. And finally, the wild card is always what's happening globally. Certainly, we are seeing financial markets and, of course, ongoing geopolitical disruptions play out globally. And as I'll pick through on after we talk about interest rates, there is potential there for those global events to start affecting risk pricing and particularly rates for loans and credit independently of what the RBA does. So that's something to watch out for. The other trend that I wanted to talk about, and this one's interesting because it helps to explain why we saw housing demand, residential property demand maintain its strength during COVID, even though we had close to zero population growth with those borders closed. Now, generally, the household formation rate, that is the rate at which we add new households to our communities, runs a little bit stronger than population growth at around 2% a year nationally versus sort of 1.7 to 1.8% for population growth. Now that's because we do have a long-term decline in average household size. That is the number of people living in each house or each dwelling. That got turbocharged during COVID. We saw it fall quite sharply, and so far it hasn't turned around. It's definitely a question for what happens from now, whether we see household size, household density move back a little bit, that is, more people sharing again, or whether this trend will continue its long-term path. What that did was, on its own, the RBA estimates that just that factor alone added 120,000 households to housing demand during 2020 and 2021, and that was despite zero population growth. So this is why the formation rate and the demand for housing does tend to run a little bit ahead of population growth, because we are spreading out and we are increasing the number and proportion of single person households and couple households, and that's true nationally, and more so in the regions than it used to be as people spread out from urban areas. As I said, these demographics are really important because they are sort of the fundamental underpinning, that supports the housing market through those pricing cycles and through things like the interest rate rise track. And it helps explain those differences across states. Now, Sydney, when we look at house price cycles, has traditionally led the cycle. So what that means is that typically in the past, we have seen house price rises and falls appear, those peaks and troughs appear earlier in Sydney than in other locations. And that's actually happening again this time around. We are already starting to see a floor forming in property prices as an average across Sydney. And you can see that in the blue growth rate there for Sydney. Dwelling prices on a monthly basis has in fact turned positive again. Brisbane's not far behind. In the past, Melbourne was usually second, but I'm really seeing a little bit of a change in the order of those cities. So Brisbane is getting the peaks and troughs earlier and a little bit more elevated than Melbourne compared to what we saw in the past. The outlier with this pattern is in fact Perth, which tends to follow quite a different track with pricing and demand. And that's largely because the economy in Western Australia is following different fundamental drivers to the eastern seaboard states. In particular, it's more heavily affected by resources and mining activity, and that affects the property cycle that we see across WA and especially in Perth. The smaller states do tend to follow the bigger ones, so these patterns will play out in places like Adelaide and even Hobart, and to a lesser extent Darwin, over the next little while. The regional areas have also tended to lag the inner cities, but the changes that we've seen in demand patterns in urban areas versus regionals might indicate that we see a slightly different pattern there, and certainly many regional areas are holding their own in terms of property demand. So I think it's important in the current environment to really pay attention to what's happening in the local market rather than just looking at the national averages and assuming that that will play out in your local area. On the interest rate track, we do watch this very closely, and conditions change literally from day to day. At the moment, there is still an expectation of another rate rise next week for the beginning of April, and that's because of the strength of the local economic conditions that the RBA is watching. They need to balance that, of course, against the increase in global risk that we've seen over the past couple of weeks, with those problems emerging in the US and in Europe with banks and financial markets there. What that means, though, is that actually the RBA is not the only influence on interest rates. There are other factors that banks need to take into account when they're setting their variable rate loan amounts and the fixed loan amounts, of course. But the increase in volatility and risk that we're seeing globally does raise the possibility that we may see mortgage rates altered and adjusted independently of what the RBA is doing, and that's because of changes in the price of risk and in interbank credit rates that we're seeing globally. As of the 22nd of March, and these probabilities get updated daily, markets were expecting just one more rate rise from the RBA and then starting to cut. I think that the more likely scenario is one more rate rise and then quite a lengthy pause while we wait to see the effects of that very steep increases in rates that we've already had, and as we just wait and watch to see what happens globally. So moving on to just, what does this mean for property volumes, the settlement volumes, as opposed to the value of them and the pricing? We are seeing a decline at the moment in volumes nationally, and the graph at the top there shows you the monthly volume of residential sales for the major states. It is falling, though, from a peak. So we have seen record highs in settlement volumes through the last 2 years, and it's fallen back from that, but we're still elevated relative to where it was pre-COVID. So, the turnover rates, the volume of sales is still extremely strong. It's just that it is down from a peak, so it might feel slower compared to recent frenetic activity, but certainly not dropping off a cliff, so to speak. Interestingly, Queensland, even though the population level and the number of properties is a little bit smaller than New South Wales and Victoria, if you have a look there, the transaction numbers are higher. And that's telling us that, the demographics of Queensland, and particularly the very fast growth that we've seen in the southeast corner of Queensland, does translate to more activity, certainly more residential property settlement activity. And that can be expected to continue as we see those high population growth rates feed through into Queensland. On the refinancing side, that's also down from peaks, but we are expecting some more surges in activity. Might be the timing is a little bit uncertain at the moment, but we know, for example, that on the fixed rate mortgage side, that those loans were typically around 10 to 15% of the total market. That rose to 40% in 2020. Those loans are now rolling off. So the RBA estimates that as a result, we're looking at almost 900,000 fixed rate mortgages that will need to be refinanced during 2023, and another 450,000 in 2024. So we are expecting to see some further peaks in refinancing activity as we go forward as a result of that pattern. Interestingly, the ABA did some work a little while ago looking at this refinancing peak, and they're estimating that out of those big numbers, about 70% of people coming off fixed rate loans do in fact move to a new lender. So they will need a fair bit of assistance in finding the deal that's right for them and making that move.
Look, at the end of the day, all of us end up buying what we perceive to be superior value. So I've used the words very deliberately. Perceived superior value. And effectively, we have a little formula in our heads, which is, what's my perception of the benefits I'm getting from this service and the quality of those benefits minus what it's going to cost me? So this is important when you're dealing and having those conversations with a prospective client, by educating them on the process, understanding more about them, demonstrating your credentials and your approach to these important things, you will build the perception of the benefits and the quality of your service. And then finally, you talk about what the fees will be. So there is a big challenge out there with some people just looking on the internet, comparing, fixed prices for conveyancing services without having ever spoken to a conveyancer, and then perhaps making contact and asking for some quotes and then wanting to know what the fee is. I really encourage all of you to think about how you engage with this prospective client, and through educating them, build superior perceived benefits and quality, and that will enable you to charge a higher price, so that formula in the eyes of the customer is, no, I'm going to go with that firm. I'm getting better benefits, better quality, greater peace of mind, minus the price. That value in my mind is higher than someone that just wanted to talk about a low price, fixed price, all over and done with. I don't know the last time I ever received free legal advice that I perceived a lot of value on. There are some people in the industry offering, free contract reviews. I would encourage all of you as professionals to educate, build superior perceived value with these clients. So we get a lot of questions and our coaches in dealing with practice owners around, well, yeah, how do I get a return on investment on doing things in business improvement? And very quickly, there are 5 sources or types of return. So there are opportunities to increase what you're charging for your core service, not to mention opportunities to identify other things that you can be recommending or providing to your existing clients to help transform their property experience. Of course, if you're putting in place improvements that are going to reduce the amount of physical labor, time and cost, and potential stress and mistake making in serving clients, that's another source of return. Reducing risks, again, every meeting we have, we talk about cyber with every business owner. It's going to be a bigger and bigger issue going forward. So that is a critical area from a risk reduction perspective. Getting more referrals, getting more clients starts with delivering higher, superior value to existing clients and reconnecting with past clients, and then less stress and more success for the owners. And one of the things I will say about what we're doing with Business Advantage is, while all of you are entrepreneurs and you've either purchased or started from scratch your own practices, and as the hearts and souls of your local communities as small business owners, no one's more important in terms of the role you play in your communities. You're in business for yourself, but with Business Advantage for conveyancers, you're not by yourself. And I'll talk through a minute a couple of the things that we've changed to make it very easy for you, for everyone involved in the profession, to interact with us and help point you in the right direction to achieving the goals you've got, to have more success with less stress, however you go about defining it. What do you have to invest in? Well, you've got to find some time to be able to focus on researching how to improve the business, selecting potential systems that could improve it, or service providers that can help you. Then, having made a selection, of course, it's going to take time and it's going to cost money to implement the improvement, to get it set up, to get the team trained, and some ongoing cost in some cases. And then thirdly, there could be ongoing costs. There may be a subscription to software. There may be different fees that you'll then need to pay for something that will reduce the errors that you make and that you can charge the client for, and reduce the costs involved in that part of the process.
So just to recap, I think the fundamental underpinnings for Australian residential property and for property markets more generally are extremely positive. We've got that population growth track. We've got ongoing growth in economic activity and employment. It will be slower from here, but it's certainly not expected to turn negative. So I haven't seen any indications that we're slipping into recession, for example. We are already seeing a trough form in residential property pricing and sales volumes in Sydney. And as I've explained, that does generally lead the property cycles nationally. So that's really good news nationally, not just for those in Sydney who are waiting to see that floor form. On the risks, the unemployment rate and the jobs market is still one of the key risks that the RBA and everyone else is watching. Sudden unemployment and sudden job loss are a key reason why people might, for example, need to default on a loan and on their credit. We're also seeing, though, tighter credit standards. So in addition to those rate rises, there are indications of a tightening in lending standards and eligibility. So that may cut some people out of their preferred property markets, or simply just reduce the amounts even further that they can borrow. Globally, the positives are inflation is easing, and we are seeing, as a result, the peaks in the interest rate cycles globally as well as locally. The major trading partners for Australia, mainly China, second to China is still Japan, and then the Asian region, are actually looking reasonably stable. So far, they're unaffected by what's happening in the US and Europe, which is good news for Australia's economy. And it means that, we do have that underlying stability in our trade partners and export options. Related to that, the trade disruptions that we've seen during the COVID years are definitely easing, and that's really been quite prominent in building materials and construction, for example. So we are seeing supply chain problems and bottlenecks easing there, which should take some of the pressure off the cost of building new homes, but also some of the delays that we've been seeing in construction times for new homes being added to our stock. And last but not least, global risks, keep an eye on it. People will be feeling a little bit nervous as they see what's happening globally. It's easy for all of us to see shades of GFC in what's happening in the US and Europe at the moment. But Australia's banks are very well capitalised. They're very heavily regulated. And to the extent that we just don't have an equivalent network of small regional banks or industry-specific banks, Australia will be like we were during the GFC, only really looking at sort of second round effects, the lingering effects on sentiment and caution and risk, rather than direct transmission to our financial sector and property markets. So all up, I think it's a good news story, but we do need to be cognizant of the risks that are on the horizon, and the way in which people might respond to those risks and require further assistance and information.
So business advantage for conveyancers, based on the research and our partnership with PEXA and what you guys have told us, we now have available for anyone in the conveyancing and legal profession, whether they be a practice owner, whether they be a professional working as a paralegal, working as a conveyancer. We now have a free membership plan available that you can go along and join. And what we've done is we've focused what's available in this free membership plan very much around business improvement priorities. So you'll see the mobile screen there in terms of the topics: getting clients, serving clients, increasing profits, managing IT, etc. Now, the other thing we've done with it is when you access those resources, so first of all, you'll join up for free, simply name an email address, then you'll receive your login, and then you'll be able to access going forward this free Business for Advantage area. We're also including access to our coaches. So you're able to ask our coaches a question. We're just finalising the actual hours, but for several hours a day, Monday to Friday, from West Coast to East Coast, you've got a particular question, a particular thing that you're working on that you're looking for a bit of guidance on, you're going to be able to interact with our coaching team. Now, in terms of some other things that are available in Business Advantage for conveyancers, like this webinar is being recorded, and our past webinars that are relevant to people running law firms and conveyancing firms have been recorded. So you'll see a couple of the topics there. So valuing your conveyancing business, what's it worth and how to get the maximum sale price. 200 practice owners attended that webinar back in November of last year. Profit improvement opportunities. What do customers want now? A couple of webinars specifically around cash flow and building a cash balance. Another one around employees. So look, it's not convenient for all of us to come live like you guys have come live today, but the majority of our members come and look at these replays. They'll often sit down and have their team with them and work their way through them. So I encourage you, if you're already a member, to access these. If you're not, to take up a free membership and then go and actually have a look at these things to further educate yourself to have more success with less stress. What I'd like to spend just a few minutes on now is talking through a couple of things that we're hearing back from the research we've been conducting. So we've had more than 200 practice owners now over the last couple of months give us some very specific feedback and their views on what they're seeing as the priorities and some of the challenges, as well as what they're seeing with respect to the marketplace and with the customers and clients that they're dealing with. So with respect to attracting and retaining clients, they're thinking about clearly the first-time client that has never worked, never actually purchased a property in the past. Then, of course, sort of sellers and rebuyers. So people that have already bought one in the past, but now are perhaps selling and perhaps rebuying. With respect to the first-time property buyers, as you would all know, in many cases, they have no or very low knowledge of the process. And so the question then for all of us is, how are we going about educating them on the process and the steps that are involved before getting into a conversation about fees? Then secondly, in terms of value added to the end-to-end buying process. So if you're buying a property for the first time and perhaps there's not a lot of experience in your family, there's a whole range of different things after the excitement of the offer being accepted and the deposit being paid. How are you thinking about providing additional help and support for them in terms of navigating that whole time frame between having paid the deposit through to actually settling and moving in? And so services like smaver.com.au are very simple things to help people have an interactive checklist, with respect to how they go about knowing what to do in planning the move and making the move. The most important thing we're finding from our research with buyers is around the level of trust they have in the professionals that will help them not only buy the property and finance the property, but manage this very complicated and opaque process. So they're very much wanting to understand the credentials, the experience of the practitioner. That's why personal referral is so important for so many of them when buying any product or service for the first time. And so a thing for everyone to think about is the process of how you go about educating this first-time customer while you're effectively going through a professional sales process. Now, something that's increasingly of importance to every Australian is any and everything to do with cybersecurity and security. So again, a great innovation from PEXA is, of course, the PEXA key, and letting your prospective client know that you're leveraging tools like the PEXA key to maximize security and peace of mind throughout the process. Now, sellers and rebuyers are a very different segment, and it's interesting in terms of who our coaches have been helping that are involved in the conveyancing practice industry, around the extent to which they think about a client as a one-off transaction versus having an ongoing relationship with them. Now, of course, we know that when there is stress around settlement and settlement dates being moved for many customers, that creates a lot of stress and sometimes leads to the process not being a particularly positive one with respect to finally settling and moving in. In some cases, the customers aren't necessarily remembering who helped them with the actual conveyancing process, which firm they work with. And again, this whole area of value added in terms of past clients, if you're managing a relationship and keeping in touch with them from time to time, that will help them remember you, refer members of their family, refer their friends to your firm, and potentially reuse you when they might be rebuying or perhaps getting into an investment property. And I think what Julie pointed out around those high numbers of fixed rate mortgages that have been taken up in the last couple of years during the low interest rate environment there are significant opportunities for many people that are going to be refinancing. So clients that you had in the last couple of years, are you helping keep them up to date with what's happening with property values in the area that they purchased in? Some of the opportunities available in the mortgage area. And I found it very interesting, Julie, that 70% of people on those fixed rate mortgages actually end up with a different financial institution. So with respect to the recent research that we wrapped up, we asked one question in particular, which was around, look, outside of running the business, we appreciate how busy every small business owner is, everyone running a law firm, running a conveyancing practice. There's a lot going on, not to mention families, friends, and other responsibilities that we've all got. But we said, look, outside of just operating the business, what's the number one thing that you would like to improve in this business? And what we've got, if we sort of start at the bottom of this particular slide in this bar chart, is we've got nearly 35% or 1 in 3 saying, look, I've got to be better at attracting and retaining clients. And part of what I talked about in the earlier slide is very pertinent to this particular issue of how do I go about attracting them and retaining them, but not simply by cutting price and discounting my way to the bottom. The second then is about 20%, so 1 in 5, it's around business planning and operations. Many people have been through law school, become practitioners, have done the relevant qualifications, become a licensed conveyancer. But I can't recall when I did my own law degree many years ago, and I spoke to a friend of mine's daughter who's just finished, anything around setting up and operating a practice, setting up and operating a business. I was speaking with someone from the AIC just recently around them starting to have a look at how can they help their members with the operation of the business outside of the technical requirements of maintaining your license. So business planning and operations is coming up as number 2. Leveraging digital technology and services. So some have specifically picked that. They're feeling a bit underdone on the digital and tech side. I can assure you that the business planning and ops area and attracting and retaining customers have a significant proportion of building digital knowledge, skills, good selection of the right digital tools and platforms that will enable you to be much more effective at attracting and retaining customers and serving clients through more efficient, less error-prone operations. Managing risks and legal requirements. Cyber came up in a number of our interviews as an area where there is growing concern. Of course, many of you know about the PEXA key. Many of you use the PEXA key. I can't stress the importance of a tool along those lines, not to mention in looking at what is it that you are in fact emailing, how you're emailing, and how you're educating your clients to interact with you in a cyber-safe way. Personal development, 1 in 10, and that's largely around building the knowledge and skills and disciplines of the owner. And our coaches work with a number of practice owners around things like time and energy management, finding that time to work on the business, not just in the business. And then managing cash flow and finance and managing employees and suppliers. You know, there are 3 big risks, and in our profit improvement webinar for Business Advantage members in December, we talked about those 3 big risk areas that every business is facing. The first was everything to do with cyber and IT, and I can't encourage you enough to get up to speed, get your team members trained, communicate clearly and consistently with your clients, but it's one major area. The other one is cash flow and cash balance risk. You know, having access to enough working capital, enough cash in the bank so that any gaps between the timing of receipts and payment of expenses, any particular things that might crop up that make it difficult to generate cash, let's say you inadvertently become ill for a period of time, that you've got that buffer there. And all of us saw the importance and our ability to get through the COVID era if in fact we had a little bit of headway there with respect to cash or access to cash. Then the third area of risk is what we call owner MEP. And owner MEP is mental, emotional, and physical health. Only recently, we've worked with a practitioner who has been diagnosed with a very significant health-related issue and is going to be unable to manage her practice for the next couple of months as she goes through treatment. So the maintenance of your mental, emotional, and physical health, you know, for all business owners, but particularly in this high-pressure, highly professional field, dealing with, in many cases, quite stressed clients, the attention to detail, the things that you guys are fantastic at doing, keeping yourself in very, very good mental, emotional, and physical health is critical. Then, of course, there's the management of employees and suppliers, and particularly with respect to those people that are providing you with various platforms and technologies which are mission critical. The other thing we've heard loud and clear, I should say, not just from practice owners, but from small business owners generally, is that they've been saying to Small Business Australia and to the Business Advantage team, who can help us with this particular area? What should I be paying for it? What's a fair fixed price? Now, exactly what is it that I'm going to be getting? So what you'll see here is 4 areas where at the moment Business Advantage has created fixed price professional services with a number of professionals that we work with. So the first one you'll see there is conveyancing, business valuation and sales strategy. So after the webinar in last November, a number of practices now have had an initial valuation done and have been getting help with preparing for sale. One is currently negotiating the actual sale of her practice in regional Australia. The second one there, profit improvement blueprint, a cyber health check that we've just launched last week to get a comprehensive review done of what you've got in place, identify where the gaps are and who you can go and work with to get those gaps filled. And then in May, we'll have one around branding, marketing and website review. It's another area that we're consistently being asked about. And we will have a fixed price professional service available so that you can know exactly where you're at, what needs to be improved. If you need someone externally to help you, where you can go and get that help.
In terms of cybersecurity advantages, it's top of mind this week, given the news of the last few days. Any thoughts on cybersecurity and how practitioners should be thinking about managing their cybersecurity?
Look, I'd encourage people to, again, if they're not already a Business Advantage member, take up the new free membership. We did a significant piece of work with Microsoft last year, and I would most certainly invest the 45 minutes in watching that webinar. It's absolutely critical in terms of understanding the size and nature of the challenges and the sorts of things that are taking place. Microsoft have a sort of bit of a self-assessment related tool available on their site. We're working closely, Small Business Australia and Microsoft and the federal government at the moment. And MFA is going to be one of the big themes, multi-factor authentication. You'll be noticing it already with a number of Microsoft-related software programs that you might use. But MFA is sort of at a very basic level. Of course, in the nature of the work going on with practitioners and these important property transactions, really leveraging off what's available from PEXA, is absolutely essential.
Bill, Julie from PEXA took us through some of the key economic trends for practitioners to keep an eye out for over the course of this year. It was interesting to see that leveraging digital technology and services was a top priority for our practitioners. Can you talk us through some of the key technology trends that practitioners might want to be mindful of in managing their businesses?
Absolutely, Lachlan. One of the areas that we're hearing and we're getting a lot of questions about from the owners of practices is around various underpinnings of their website, the extent to which things like they use WordPress and some plugins in some cases, the role of what's known as CRMs or customer relationship management technologies. There's different forms. In fact, we're going through a bit of a review, our coaching team at the moment, to understand and compare various practice management platforms that are available, some which are available for free, but then there are different fees around searching costs, etc. There's one that we're evaluating at the moment, which is initially just in Victoria, but just will simplify and ensure 100% accuracy on interacting with local government and determining, precisely, the split of rates and water charges and other relevant elements that should be included. The practitioners we've been chatting with are saying, in some cases, there've been up to 30 or 40% sort of errors in terms of putting that stuff together, taking a lot of time, requiring a rework. So I think it's a combination, Lachlan, of having a good understanding of exactly who the client types are now, and then what are the existing processes, what is being used, mapping out how much time is being taken in labour. So think about on average, every hour, you might as well call it $60 or $70 of wages, salary related costs. And even as owners, we need to think about that time and putting a cost to it. And then looking at where that labour is, where there's copying and pasting going on, where spreadsheets are being used, and then looking at a short list of alternatives, which you enter the data once and it's correct, or the data comes across through what's called an API, which stands for Application Programming Interface. But certainly moving away from simply, email-related communication and leveraging things like PEXA Key is absolutely critical in establishing the credibility of your approach with your client. We know that most clients that are first timers don't understand that there's a whole bunch of out-of-pocket other expenses, disbursements that are going to end up on the invoice. That often becomes a bit of a challenge with some clients if that hasn't been pointed out at the very front end in setting expectations. But I think there's a lot of different systems being used out there, Lachlan, and it starts with understanding the practice, working out the time and costs now of labour and IT systems related costs, and then given that saying, well, okay, what can I evaluate and move to? Look, thanks very much, Lachlan. And again, I'd like to thank the PEXA team. And it's just great work that everyone running law firms and conveyancing firms is doing. As small businesses, many of you, you're the heart and soul of what goes on in those local communities. The overview of what's happening in the property sector and the economy only shows that you guys are going to be relied upon more and more. And we need to ensure that you are the most professional and the safest people to deal with, and that people understand, particularly these first-time customers, what's involved, how professional you are, and that, if you pay peanuts, you get monkeys.
And finally, I think the Australian property market has proved its resilience repeatedly over many, many years, but people will be feeling anxious with what lies ahead, particularly with interest rates and those global financial market disruptions. So anything you can do to reassure them about their transactions is extremely valuable.
And I think, Lachlan, in closing, we've got available many of PEXA's property insight reports. And if you've got investors as clients, so easy just to forward over a link to those clients, letting them know about these reports. It's very, very good research. No one knows more than PEXA about the dynamics as to what's taking place in this whole marketplace. And, it'd be great to hear about it from your law firm or conveyancing firm, rather than, via a real estate agent.
And that's a great note to finish on, Bill. You're all welcome to contact us at Small Business or at PEXA directly. So please reach out if you have any further questions that you think of after our webinar wraps up. And that's all we have time for today. And thank you so much, all of you, for joining us.
Thank you. Goodbye.